Hello, Jeremy.
Good morning. How you doing?
I'm doing great. How are you doing on your own side?
Good. Yeah, everything's well here in California. Where are you located, Ziad?
Currently, I am in Sweden. Have you been in Sweden before?
Never, but I'd love to make the trip one day.
Yeah, you are welcome. Most welcome. All right, Jeremy, as I can see right here from our own last chats, you have already mentioned before that you are managing 441 million in asset management, and that you are generating return like 22% yearly. That's what you are generating, correct?
Correct. That's net of fees.
Exactly. And 10% you have for the structure on the back end, correct?
That's credit. That's right. Yeah. So it's a 0% management fee and a 10% profit-based management fee. So it's quite a bit differentiated, as you know. A lot of people are doing 2 and 20. So investors really like the 0 and 10, and it comes with a high watermark as well.
Understood. Understood. I would love to know more about your own background. What have you already built so far? What have you already done before? And before the end of the call, if there is any potential collaboration, so I will make sure to share the next few steps from there.
Okay, sure. I mean, maybe I can tell you a little bit about Check Capital. So our firm was founded in 1987 by Steve Check, hence the name. And what I would say is we manage a total of 2.1 billion in total assets. The strategy we're talking about that we're looking to raise capital for is exactly all of the highlights that you mentioned, where we've got basically it's called the Berkshire Private Program. You're correct to identify it's 22% per year now for 15 and a half years, 0 and 10 management fee. And we have a number of family offices in it and then individuals in it as well, but no institutions. And anyways, the reason we're on the call, by the way, is it how do you pronounce your name? Is it Ziad or Ziad?
Ziad.
Ziad. Okay. So the reason we're talking is we're thinking about, hey, how do we raise capital, maybe even outside the United States? All of our clients, by the way, are in the United States. It's all separately managed accounts. It's all done at Fidelity or Schwab, or our two custodians. And so we're a little bit different in this way. And then, by the way, we think we're the only ones doing this strategy. And the reason we know this is because all the options volume for Berkshire Hathaway is public information. So if you go to buy an options contract at Berkshire, you can see how much volume there is in the dollar volume. And so there's no one else doing it because basically there's no volume there. So anyway, so we think we've got a very differentiated strategy now, 15 and a half year GIPS compliant track record. So I think we've got an interesting story. And our CEO and founder is an engineer by training, so not good on the marketing side, and has never really spent a lot of time marketing this. But we think we've got something very differentiated. So I'm exploring different avenues in terms of how to broaden this out. I've been here 8.5 years. And I can take it wherever you want, Ziad.
Great. Thanks for sharing that. From what you have already mentioned before, you have connection today with family offices, ultra high net worth individuals from the US only, correct?
That's also correct. Yes. I don't believe we have a single international investor in the fund. But it's all technically possible to do it internationally. There's nothing technically infeasible about it.
Understood. Why is that? Why you don't have anyone from the real players?
Sure. I think it's our firm heritage. So we our firm located in California. We're an RIA, so that's our technical structure. It's called a registered investment advisor, although most would call us like an investment manager, because we look a lot different than the rest of the RIAs in the United States. But we've never really looked at going international. And I know there's a lot of capital international. And I think this is a very differentiated strategy, hence sort of why I'm talking to you. We've never really put the muscle behind doing it. And then also, by the way, we custody only at Fidelity or Schwab, but for the right check size, sure, we'd be willing to custody at any other institution. But it's really a matter of the fact that basically our heritage is in the United States.
Understood. So you have already raised capital from the United States in like for the last 15 years, as you have already mentioned to me right here. And what have you already done to raise capital constantly? I mean, do you have your own network, or is it like you are attending events, conferences? What are you doing regarding to that?
Yeah, that's a good question as well. So we're doing a webinar about twice a year on average. So we invite all of our clients and prospects to join us on that webinar. That's one way we do it. We put out a monthly newsletter giving our thoughts on the latest financial market happenings. And so we just share our thoughts broadly. We're very transparent with the way we think about investing. And so just share our thoughts. That's via hard copies. We'll actually mail it to folks, and we actually email it as well. So people can get it via both of those methods. We also do an annual client conference. That's for our clients only, but those clients can invite a friend if they want, or a family member. So that's another way that that's done. And that's about it, Ziad.
Understood. So you are generating more like refills from the same existing clients that they have already invested into your own fund. Is that the case here? Is that how you are gaining capital sometime?
Yes, and that's a great example. Like I work with a family office located here in California. They put $1 million in a few years ago. Have had a good outcome. So they put another $1 million in last year. Then they just put another $1 million in a month ago. So it's more just us proving that it works over time, building the relationship, explaining the investment strategy. But yeah, it's been mostly just what I would call like hand-to-hand combat. We're not doing any conferences. We're not doing any pay to play type scenarios, nothing like that.
Understood. Do you think that you are missing out, or what do you think?
Pardon, ask the question again, Ziad.
Yeah, sure. I mean, do you think that you are missing out, or you are missing on a lot of like revenues that you could actually have in the asset under management, or you could actually have inside the fund if you have raised more capital? I mean, that's great. You are at 400 million range. I have seen other funds, they have already actually achieved way more than what you have already achieved. I will be completely honest with you. So
Yeah.
do you think that you could actually have done more, or what do you think regarding to that?
Sure. So I think because of the strategy, I think it takes a very specific type of client to get comfortable with the strategy. And then also because it's a higher investment return and higher risk strategy, that it shouldn't be anyone's overall portfolio. So we think it represents like 10% or 15% of someone's portfolio. That's acceptable from our perspective. And to answer your question head on, of course, we're missing out on opportunity by the virtue of the fact that all of our clients are in the United States. I know that there's family offices in Asia and Europe and the Middle East that would be interested in this strategy, but we haven't really found the right match in terms of someone who really understands Berkshire and understands the story and understands what it is we do. So I know that we're missing out, hence the reason we're having this conversation. So that's how we think about it.
Understood. And for the capital targets that you're looking to raise, I mean, the first level or the first stage that you're looking to get up to, is it like 1 billion?
Yeah, we think we can comfortably have sure. Yeah, that'd be a great first step, getting up to 1 billion from 450 million where we are today.
Do you have any like roadmap, or have you already planned it out on when actually you would get there? Is it like in 3-5 years? Or is it like in shorter time?
No roadmap planned. Our CEO, again, an engineer by training, so it's more just do a good job for our clients, and over time they'll bring more and more capital our way. And then again, occasional, like I said, 2 times a year webinar, but no roadmap.
Yeah, I understood. But do you think that's scalable?
Do I think your time frame of 3 to 5 years to $1 billion is doable? Yeah, roughly. I wouldn't be surprised to see like that would be like 100 million a year. I say it's a little under that. I think it's more like 7 to 10 years to get to $1 billion, just by the way we're doing it right now.
Exactly, 7 to 10 years, correct?
That's what I think based on the way we're doing it right now. Yeah.
Yeah. Let's say seven. Let's say 8 years.
Okay.
We will not say 10. 10 years. I mean, do you think that you can actually wait for like 10 years to get up there, or do you think 8 to 10 years would actually make sense for you to wait to get it?
Yeah, believe it or not, that's probably not the answer you want. It'd be okay. We're doing just fine for our clients, and so we'd be okay with 8 to 10 years. The question is, maybe we put a little bit of put our foot on the accelerator, and instead of waiting 8 to 10 years, I know that basically because I know it's already been done. We had a family office out of Ohio, Ohio, which is a state in the United States. They want to write like a $50 million check, and they've written $30 million so far, and they're going to write the other 20 million in the coming year. So I know that there's these big capital bites out there where you get a mutually aligned scenario that it could be. So like a couple checks like that will get us to $1 billion, in a year. forget the 8 to 10 years. So it can be done a number of ways, but yeah, we'd be okay doing it the 8 to 10 years. We're in no hurry.
Yeah, I mean, that's absolutely great. That's absolutely great that you have this mindset right here. But I mean, at the same time, if you're looking to scale up aggressively, then it may be that you need to actually adopt a new perspective.
Yeah, well, we might. And we'd be open to that. Hence the reason we're talking. We're not afraid to invest.